did you actually join Nero?
Mate,
before?
It's actually quite a cool story. Rusty and I have known each other my whole career, basically. I was an engineer, but basically quickly jumped into corporate finance and was working for a boutique out of Melbourne.
I remember Rusty saying it was the best presentation he'd ever seen from the worst...
for the worst company.
The worst company, yeah.
Yeah. The
that's
quote
probably
was something along the lines of, "That is the best, most institutional presentation I've ever seen for a bucket of shit."
That's a banger. That's a banger. JD, another week, another big mining news week. There's a lot happening, and this week, the wonderful Daniel Dingo Harangozo. How do you say his last name?
Harangozo?
I'd never say his last name. It's
Dingo. We've got Dingo joining us.
Gozo. Yeah, anyway, just Gozo, tell me how to say your surname. I'd love a correction on that one. But the wonderful Dingo, who is a true thoughtful genius at the very smart Nero Resource Fund. I think he's titled as CEO.
I think you're right.
Yeah.
Stoked to have him on the show, and very excited to unpack with him all the big events from this week, because we had a heap going on, from anti-involution discussions in China to what's happening in the mid-cap gold space, all the way through to resolution, rare earth movements, and then going through the best deals with a bunch of hot takes throughout, mate. So keen to share this one.
Very keen. You said big events, and that reminded me of a big event in our calendar. You know what? I'm gonna call our friend Dom about this big event.
Trav, how are you, mate?
Very well, Dom.
Dom, we're keen to hear why people should come down to ADU.
Come down to ADU. I mean, that's probably the simplest question to answer in the world, lads. I mean, it's Africa Down Under is, other than the mining in Endeavour, which I know you guys have been to in Cape Town, this is the largest African mining event in the world, which is pretty remarkable given that it's all the way over the Indian Ocean here in little old Perth. But 20 years ago when we started this conference, we could have had it in a phone box, and now there's well over 1,000 people coming to the conference. So, look, I think it's one of the main events on the Australian mining calendar these days.
I'm sold. I'm sold, mate. You've got me. I'm in.
I haven't even got to the program yet. Really, about
unpack the program.
I just told you how big it was. I mean, I think you blokes have talked a lot in the recent past about the African scene and the complications of it. I mean, there's no hiding away that there's an African discount for a reason. You know, there's a high level of risk associated with some jurisdictions. But if you look at the cold hard facts, I mean, you see some of the companies that are on the program on the 3rd to 5th of September, and you realise just how well they're performing on the ASX at the moment. You've got Perseus Mining and West African Resources, probably the two best performers in the last 3 years amongst the gold miners on the ASX, both now multi-billion-dollar companies, and I think both would argue still undervalued in comparison to their peers. Even in the last couple of weeks, we've seen companies like Taraco Gold in Cote d'Ivoire raise 65 million on the market. Then even just in the last couple of days, a company like Lindian Resources with their Kunga Kinda rare earth project in Malawi, a country that doesn't have any mining really as such, in a commodity that we all thought had bust, raised more than 90 million for that project. So, I mean, these are up and coming companies, and a host of others, of course, that we've got on the program. And we look forward to having new blokes there as well.
That's the bread and butter of what you guys do regularly now. You find those sort of bombed out or deep in the cost curve commodities that are not getting all that much love.
Yeah,
There's
we love
found a
hunting
flavour
in
for
the
that.
ugly places where nobody else is at times. And it's not easy. It takes a bit of belief at times. It takes a lot of luck. Yeah, I think anybody who denies that is probably lying. But equally, there's method to the madness in that, and often it is a strict discipline to cost curves. It is a strict discipline to the cyclicality, the cyclical nature of what we invest in, and being comfortable with that, being comfortable with volatility. Volatility is your friend as long as you can use it to your advantage. So
You have to be patient.
you have to be patient, and equally, volatility creates value opportunities. So you have to be brave enough sometimes, or willing enough, to make that investment at that valuation, because the risk return is there. So then, yes, you might have to be patient in how it's realised or whatnot. And not always simple, but typically, yeah, if you've got a commodity in the cost curve, it's been there for a long time, the equities are implying a commodity price that is reflective of spot or lower, and there's a real asset base there or an asset base to be de-risked. There are wonderful opportunities that tend to be not liked by the market at the time.
Yeah, I love the style. Hopefully we can peel more into it today, Dingo. We're stoked to have you on for the weekly wrap. We're going to start with all the big stories in the mining industry, the money miners. You'll start to get familiar with this style. And yeah, to start up, we've got China Anti-Involution, the big theme that I think is sort of playing out slowly. Firstly, from a sort of cultural perspective in China, I think it really sort of started to take shape through the early 2020s, and now in the last couple of years from a sort of policy setting. And I think in the last couple of months in particular, this one has really sort of exploded into the consciousness, at least for resource investors, because the ramifications across the full suite from items that are produced, manufactured, all the way to the raw materials are pretty sort of are pretty eye-watering, I think. So how have you guys at Nero, to start with this one, Dingo, been thinking about this? Is this a theme you think is real or a bit of a flash in the pan?
Yeah, no, I think Chinese anti-involution, I think it's a real theme. I think that we're seeing evidence of it occurring. It probably stops short of necessarily being in the headspace yet that this is the supply side reform of the mid-2010s or whatever, which led to a radical repricing of the entire sector necessarily. But I think there's good, credible evidence of it occurring in isolation, with a particular focus on sectors that are unprofitable. So, I think we've seen it perhaps in the coal sector with some of the environmental sort of strictness or regulation that they're placing around some of the miners there. I think we're seeing evidence of it in lithium, perhaps in bauxite, and these types of unprofitable commodities, if you like. Equally, I'm not sure that the idea of this is to see those commodities priced 3-4 times higher than what they are today in quick formation. I still think there's probably a rationalism there, and so I'm constructive. I'm optimistic around each of those sectors in isolation, cautiously, but I think at the moment as well, it's not necessarily being coupled with a demand side stimulus that you'd probably like to see.
So how do you think about the demand side there? Do you expect stimulus to come in that form? Because the interest rate side of it and all of that, it just operates so differently in China to the way it has historically here in the West, at least.
Yeah, I think it's still a massive opportunity on the policy side for China. I still think they're holding that sort of gun in the holster, if you like. They can do more to stimulate demand, and the real stimulatory unlock will be if they can get the consumer to start pulling out of the savings, which have been continuing to accumulate in China over the last 5 to 10 years now, and commit that into either investment, and whether that be in equity markets, which promotes a capital cycle, or into capital itself, or even into consumption. They've still got that in the arsenal if they need to pull on it. They at the moment appear to be comfortable with how the stimulus has sort of supported or provided a safety net to the economy there. So I fall very short of being bearish on China, even though I think there's a little bit of sogginess in the data at the moment.
We've had a ton of conversations on this theme this week, JD, but various fund managers or commodity guys or the likes, and how this anti-involution policy shift plays out. There's so much money to be made if you are if you can kind of read the tea leaves accurately here, and it's kind of a little bit ironic and perplexing as well, because at the exact same time as the rest of the world has come to the realization that we should be more like China. We should have more government control and strategic priorities and more socialism. China's doing the opposite and saying, no, we should be more profitable. Our enterprises should be, we should have like less price wars and more profitability in the enterprise to have better health of the private business dynamism, which is incredible.
The irony is so rich. I actually remember listening to a podcast maybe 3, 4, 5 years ago, and they were talking about it was a resource fund manager talking about China stimulus and getting long behind it. And I think the same could be said by much more experienced people, that there's for a long time been a hope that this China stimulus sort of comes in. And, from the very first signs of the property market slowing down through 2020, 2021, people sort of hoped, but they've really let that kind of cool out. So it's fascinating to see where it goes. And they've got lots of levers, like for one, savings rates are much higher because they don't have the type of welfare system that we kind of have in the West. So there's lots of ways in which they could implement that. To pull it back more to resources though, Dingo, lithium is the big one that's captured the imagination because it's run up like 30, 40% in a
60%.
It's run up a long way in a very short time. But you guys love to hunt around in the fringes and stuff. You mentioned bauxite there. Are there more metals or other sort of esoteric ways that you've thought about playing this theme at all?
I don't think it's changed our investment thesis or philosophies or approaches too much, to be honest. I think we have had fundamentally, at a really structural level, have certainly had a view that China is kind of safety netting the economy and the bazooka is not coming. However, they maintain enough levers that if it got sufficiently dire, if it got systemic, then yes, like they can go back to the old playbook. They can go back to property and being more outright in stimulating that to promote the wealth effect, which could then bring the consumer back. Bring it back to the question, with that as our baseline, and that's been our baseline now for several years, anti-involution is kind of a helpful extension of that policy process that hasn't necessarily changed how we invest. So, lithium was a really interesting place to do a little bit of hunting when you're deep in the cost curve. And I reckon that's been the difficult thing in lithium. So it's been difficult to find attractive valuation even within that context. So you've been able to find it in the fringes, in some of the developers and some of the best sort of new assets coming to market in the next cycle. Because one thing is for sure, it is cyclical. It will recover. Structurally, that industry is very complicated, much more complicated than when I used to work in it. And there is latent capacity. And we haven't necessarily seen the level of physical product or investment come out of the market that would have make it structurally more attractive. Do you know what I mean? Where you could really get behind, I think, a 60% reprice in the commodity and say, maybe we're just finding a new level here.
Yeah, totally agree. I think the valuations on the bigger end of town, you always kind of wanted to get them, a little cheaper, like sort of Pilbara and even Liontown sort of comes to mind. But all of a sudden they've sort of roared away from us once more.
And like in this commodity downturn, quite unusually, I wouldn't say investment really stopped. Pilbara expanded. MinRes have latent capacity. IGO, Green Bushes, expanded. Africa kept growing. Argentina is now just getting those brines into a place where they're going to start coming into the market in larger volumes. So despite the price signal not being there, investment still was.
Yep.
And that is, that will have a consequence, right? Whether it's just it caps prices out at a lower level, or we still need to work through a bit of that capacity before we get to a more sustained balance.
Totally. Let's talk about Regis, guys. Trav, this is right in your wheelhouse. But Regis have been rumoured to be hunting, looking around, doing a deal. I think they've been named to be in every single data room that's existed in the last couple of years. Yeah, they've found themselves in the news again, and the wording has been kind of interesting.
Yeah,
right?
well, they rebutted the Street Talk article. Street Talk article basically said that they're doing their work to pick up the other 70% of Tropicana. There's been rumours swirling about Anglo Gold Ashanti's future in Australia. Sunrise Dam is rumoured to be on the chopping block. Regis also pole position there too, mate. If you read all the Regis rumours, Regis is actually the most off. If you look at the focus chart today, they're the gold miner. That's I think they're 4% this morning, which for all the goldies, that just stood out like a sore thumb.
So on the back of the rumours earlier, they came out with the full year results today as well. Paying about $38 million out in the dividend, and then costs are sort of very much now in the high 2000s going forward.
So they come out with this response to the speculation. They say, we're not in advanced discussions. Do you read into that, Dingo? I think they're in discussions, just with every intention of them becoming advanced. Do you think there's a deal to be done with Anglo Gold? Do you think what is Regis going to buy? They're going to buy something. How do they get the deal done?
In some regards, I feel a little bit sorry for Regis because they feel like they're just the kid in the playground getting picked on. But they've
got a big pile of cash. It's not all that.
They do. Every journalist who can throw something at them
when
will.
It's a slow news day, I write about Regis and
Now, I think, but again, where there's smoke, there's fire. And perhaps it's reflective of, where valuations on a lot of these Australian gold miners are, right? And their portfolio probably looks like it needs something else or it's repriced to a certain level that their paper has value. And so what are the things you would look at? The things that are for sale, obviously, and then the things you already own. So I'd be absolutely shocked if they weren't in a discussion. For me, more broadly, if I step it back to, is it interesting for us? Well, at this point in the cycle, people paying up for assets is exactly what we don't want to be invested in. I don't think that that's good capital allocation policy. And maybe it is better to distribute more of that cash out in a dividend, right? And this is what I think the sector often gets wrong. There is I think Zeppi said the other day, M&A is just kind of a matter of timing, if you like. Like it's when you can do a deal necessarily, as opposed to is it the best part. So, and I sympathise with that in some regards. Like you need buyers and sellers to agree. Those bid-ask spreads need to meet. But the best guys or the best capital investment that we see in the space is done counter-cyclically. You find a way, or you find a way to find the cheap assets that can be unlocked. And that's the challenge Regis has got, I think. And to their credit, they not to date, we haven't seen. They haven't announced anything on the very public asset sales that have been out there.
Had discipline.
They've had discipline.
Yeah. And they probably didn't have a license to do M&A for quite a while just because of the way the market reacted to the acquisition of the initial 30% of Trop.
Yeah, exactly right.
An interesting part of that deal, and that was I think early 2021 that came out, because they've got 30% of Trop now, they actually have a preemptive right over the other 70%. So in the same way, there were these kind of favourable dynamics for Greatland Gold, getting hold of Telfer and the other part of Havron at a reasonable enough price because of the preemptive right they had. Regis has kind of got the same, and because of the exact pro-cyclical, thing you've talked about, no gold miner really wants to do pro-cyclical M&A. And if Anglo Gold makes a decision that they are going to leave Australia in their entirety, the whole Australian gold portfolio is for sale. Well, who's gonna throw in a bid for Trop, knowing that Regis has a preemptive and would happily pay overs? It actually gives them a kind of a favourable, sales dynamic to participate in and maybe buy at a reasonable price, just because the preemptive is there and the apprehension of the peers to pay overs.
Definitely. The original 30% acquisition came with a lot of criticism.
Big time.
And what they paid for it. And it's ironic that we're back there.
Yeah.
4 years later on the other 70%. But yes, like in doing that deal, they now have probably a good strategic position on the other 70%. And, if they've got time to be patient, I mean, you probably can be.
Yeah.
I'm not intimately in the detail around either the asset or their strategy or anything like that. It always helps to have that last right of refusal, because then you can be disciplined. You get the final look.
So you made the comment when you started there, Dingo, about looking at the valuations across the like let's focus in on the mid-cap goldies to start. And this will tie in with our next story about Vault doing a buyback. But are you sort of seeing value in that, call it $1 to $5 billion space with the goldies? Like the gold prices run massively, their earnings have shot up. Most of them have appreciated pretty healthily, but there's still debate out there about sort of, are they being priced appropriately? Where do you kind of fall in on that debate?
I think there's a bit of a spectrum out there across valuations. I think overall the sector feels pretty reasonably priced, to be honest, and it's repriced pretty well. What's your overall view on where the commodity goes? I think we'll probably dictate that in the shorter term.
If you believe spot gold price is the new gold price, then my God, they're criminally undervalued.
Well,
right?
exactly, right? Yeah. If you run that out in perpetuity, you can mount the argument. I think names like Vault, to be fair, they did look cheap relative to the sector, and there was a fundamental argument to run there probably as well. Fascinating to see what they did yesterday in the market.
And the market loved it as well. Like they jumped up 11, 12%, finally putting in that sort of capital management piece into play.
I mean, it was a bit of it was a very interesting day. They had 3 announcements, one an earnings beat. There's a part of the market that loves that in isolation. A CEO stepping away and at the same time putting in a buyback. So, I think if I'm a CEO stepping away, what a beautiful day to do it when I've just beat earnings and I'm putting a buyback in place.
I think you're right, but you have to sort of think that's like a 300 odd million, total sum of what they're sort of guiding they will spend buying back stock over the next 12 months. That's a pretty healthy dent in the cash pile that they have if they end up fully deploying that and buying all the shares back.
Yeah. I mean, look, it's a good signal, I think, on how they view the value of their equity. If they're willing to commit that much money to buying it back.
I find it disappointing that they come to this realization now where they had every opportunity to cancel the shares that Silver Lake owned in Red 5 at the time of the deal. Remember, they owned, I think it was like a 10% stake. They didn't. They monetized it, which is, effectively like cap raise-ish
for
effect.
sure.
So, but now they're doing a buyback. And what's changed between now and then? Well, their hedge book is now more out of the money. The capex profile is maybe building. Rather, I commend them if they wanted to explore a deal and now that deal doesn't look possible and so they've had to reconfigure their capital allocation. But I don't understand why they didn't come to a similar decision at the time of the deal with Red 5.
Yeah, look, I think hindsight vision is 20/20, so I'm somewhat cautious in these types of backwards looking analysis. But, look, could they have foreseen this and so therefore could they have just cancelled the shares back then at a much lower price? Could they have been buying back shares a lot earlier? Possibly, So I suppose you can mount an argument. Equally, the gold price has significantly re-rated in the last 2 years. They feel like they've been, working through a process of getting the capital stack clear to the market. King of the Hills has been through several downgrades, and so maybe they needed to work through that process to get to a place of comfort in being able to allocate the capital the way that they now have in the stack. I mean, that would be the optimistic way of looking at it.
Vault makes me think of Mount Munga, makes me think of mines in the goldfields, makes me think of the one organisation I trust to turn big rocks in the goldfields into little rocks because they've been doing it forever superbly.
Axis Mineral Services.
Absolutely phenomenal. We know that they turn big rocks into little rocks. We know that they've got this enhanced backing from Rawbex now to embark on bigger things in more broad locations. But we haven't talked about the quality of their people before, JD, because they've got some of the most dynamic people who are so solution oriented to the client throughout that business.
100%, mate. Jason O'Rourke. This team has heaps of experience. You mentioned the takeover. They've got the engineering capability behind them, the financial backing. I think all of that is the suite or the keys to the success that they're going to have in pushing themselves outside the goldfields with all these goldies that we spoke about. But we know they've worked on pretty much every project in that area and pushing the horizons out to the Pilbara, to the southwest and beyond, mate.
Solutions. What does a solution look like when you're turning big rocks into little rocks? Well, mate, stuff goes wrong all the time. You're breaking parts. You think things are getting jammed in all of these different places. Equipment goes down. But with someone like Axis operating kit, they know what they're doing to make sure that you're always turning big rocks into little rocks in a predictable way. And they come up with unique solutions to make it all happen.
100%, mate. Whether it's a bit of civil work, airstrips, mobile crushing solutions, their bread and butter, they'll look after you.
Quality people, Axis Mineral Services.
Go Axis. Should do grade control, guys.
Let's do it, mate. This is got to give a letter grade A to F of a major corporate move or policy or whatever that we've come across this week. Commodity trend. Explain your reasoning. Debate. We're all for it.
Punchy views.
Punchy views. Yeah.
All right. Let's start with Peabody terminating their deal with Anglo. So we actually spoke about this one last week. Trav, kick us off, mate. What do you give this one?
It's not just that they've terminated. Like Anglo, in response to saying they're gonna, they're
gonna sue them,
sue them for damages as a result of it. They disagree with the ability to terminate it, given they disagree on whether or not what's going on there is a material adverse event. Mate, I actually think, like, if I think about it from Peabody's perspective, I'm going to actually give them a B here. If they didn't think value was there anymore, even though their stock has rebounded, like good on them for actually not having so much deal commitment. There's a lot of momentum in a deal. There's so much momentum to just get a deal done. And for them, they came to market, all of a sudden the asset did change, and also the response to the deal in the first place, like, for Peabody was like no one was expecting this. They hadn't guided the market that they were going to be in and around the hoop here. The price was probably higher than the market thought. You had to pay for on a multiple basis for coal assets as well at the time, and the stock tanked because there was a funding concern. So they've probably got a bunch of shareholder feedback, and if they've actually been able to pull themselves out of the deal momentum and reconfigure on that basis, then I'll give them a B. On Anglo, I think it's also give them a C, just because there's I think they'll find an outcome here. It'll sell for less, but they'll get an outcome here. They'll sell the assets.
Yeah, I think you're right. Dingo, got a rating for this one, mate?
Really interesting. So initially, I'd give Peabody like an E. I think that transaction was almost history repeating itself.
Yeah.
And that was, it was crazy to think that it might occur again, right?
Yeah.
Like the last time Peabody made a major transaction like that was at the top of the market. They end up going into Chapter 11, bankruptcy, right? It was the deal. It was poor deal discipline that played a major role there. And then here we are again, several years later, at the top of the coal market, paying a top price, like a multiple of their market cap almost. Well, certainly once the shares derated what they had to fund, which just seemed radically illogical to me. And the market obviously agreed with that. Now, it's almost like, you failed your exam and your professor or whatever really likes you, so it gives you a second chance at it in a way. And the way that they've responded here by pulling the levers at their disposal to try and walk away from the deal because of the risk that it poses, I think is sensible. Like it's good to see them going down with a fight. I don't have a view on the grounds at which they've got here, and there's still a risk at what that liability might look like. They've pulled the MAC clause, the infamously uncertain clause that you get to basically interpret in your own way. You'd have to defer to lawyers as to how you fight this one out. But yeah, I think there's still a little bit of risk associated with that, but it's good to see them pulling that lever, particularly if it's less dilutive or less costly than actually having to complete at that price.
Totally. Yeah, I think you're spot on. So this deal got announced like November 2024, and straight away, like the share price starts plummeting. So the share price had pretty much halved by the time there's the fire, end of March, early April at Moranbah. And this would have been the thing that like Peabody were praying for. This gave them the out, and they were begging and praying, I reckon, every single night for an out on this deal. And
You reckon? I reckon
100%.
there's so much, like, I do think there's a lot of pushback, but man, like, the world is full of empire builders, empire building management teams, especially US listed companies, because the bigger your company, the more assets you own, the more you pay yourself, and and it scales insane. I just think, like, I think my default assumption is that management teams want to build empires, and even though it would have been bad for shareholders, it could have been better for management. And so, like, I feel like there's so much commitment to go through with it. Like,
agreed. But within 6 months, they'd realised this wasn't the right move, and they were praying for an out and like praying for a second go at that move, and they got it. And who knows what the liability ends up being? But like, I cannot give them a positive rating at all. You know, it's got to be a D or an E for the discipline going into the initial transaction. That was very poor. And you know, like you said earlier, Dingo, like hindsight's 20/20, but it proved to be very, very poor timing.
To Trav's point, this type of perverse capital allocation from executives is really poor. Do you know what I mean? And at a point in time, they made a decision. Either they hadn't consulted shareholders, or they just had a radically different view to the reality of how this would be perceived, and they kind of went with it anyway. And that's the difficult bit. If you're looking at Peabody now, is like, you know, would it be a good investment? And
it would have been if it went into Chapter 11 again and you could buy it out of Chapter 11.
It would have been fantastic.
They wanted to do it with so much debt as well, so it was sort of like ridden with risk the whole way through.
Yeah, and the best guys, I think, that have long-term success in this industry, like there's a lot of guys that do this industry, and I'm talking about now, whether it's anyone, whether you're running a company or you're a fund manager or whatever, there's a lot of guys that do this industry, and there's only so many guys that I think do it well. And there's a big, big difference. And doing it well is about being a disciplined capital allocator. You know,
Totally.
that is where you will get reward in the long run. And there are guys that trade on the ASX with huge premiums because of you know, that characteristic.
Speaking of disciplined capital allocation, mate, the next thing to give a grade control to, you see this one, this stock, Kaili Resources, KLR.
Extraordinary, wasn't it?
Very disciplined capital allocation.
Talk about get rich quick.
Whoever was buying the stock on market, but clearly just wanted to, I mean, 94% was controlled by the top 20 shareholders. It's a very interesting, curious register, and clearly a liquid micro cap, but soared an astronomical intraday percentage. I've never seen anything like it before.
What was the number? Like 8,600% or something?
I was watching it in real time when somebody clued me onto it just for 10 minutes. And it was trading up 6,000%.
That's crazy.
I put it on Iris, and I watched it trade in 15 minutes to 9,000%. So it was a great buy there at 6,000% up.
Good if you can get it. Only $2 million worth of shares traded hands the whole day.
Yeah, is that right?
Yeah, the whole day. And then so it broke a high of over $3, dropped by yesterday afternoon when I checked in on it to 19 cents. And this morning up another healthy 350%. So went into a pause in trading because the ASX put in a pause at like 82 cents. I don't know how to rate this one. Not a big fan of the pump and dump. I'll give that one probably an F. But A for entertainment, like eye-catching sort of stuff. What do you guys reckon?
Yeah, I think like markets will be like funny games will happen on markets to the extent they're allowed to happen. So I just give ASX an F for the day.
I mean, yeah, it's very hard to say much more than that. There's a very curious register. There's clearly some very suspicious things going on there. I've absolutely no insight.
Yeah. Let's change tack and go to America for a second. So Resolution Copper was in the news again this week, and there was actually a few different things all kind of coalescing on the same day. So on the day that the heads of both BHP and Rio went to the White House, got a photo with Mr. Trump, you had another appeal lodged by a group of environmentalists as well as Native American groups. Now, this had come a couple months after what was supposedly the final approvals needed for this project that's been in the works for well over kind of 20 years now. So maybe I'll go first and give a rating and explanation, I think this one's a D in my mind. And how I sort of thought about it is like the ability to build mines in the US, because like mines always come with trade-offs, as we all know, and there will be, you know, land disturbance because of this mine, a sort of block cave, 1.5 kilometres but below the ground. But it's a trade-off, and if they're going to be serious about having this copper come from the States, then there's no sort of perfectly desolate part of America where there's going to be copper there for them to kind of take. So you're going to have to pick and choose, and it's going to have to come from somewhere. Otherwise, it's going to come from elsewhere in the world, or prices will go up, and it will sort of adjust with that pricing sort of mechanism. So the way in which the US is just so litigious these days, and even after final approval is given for a mine, it still gets bogged down, is kind of mind-blowing, but it's kind of been that way for the best part of 50 years, and that's why I think capital will keep going to other jurisdictions where you can actually get kind of things done. I'm not sure if you guys think about this one in a kind of different light, but yeah, I don't think any of us are massively surprised on this front.
Probably not surprised. Been a very controversial asset, this one, over the journey. It's been through a long journey. I would take a different route just to start here, and I would say I'm going to give the US probably a B+ here on where they're trying to take policy, because I think investment, often what I reckon the market misses here is that commodities are long lead, right? They're long lead investment. They require vision. They require the ability to think long term. And arguably that's why China has pulled the West's pants down and spanked it so hard in the last 10, 20 years. Just taking a step back to that last point. You need two things, therefore, to invest. You need a price signal or a view on a price signal, and you need a policy setting that you can get behind, because you need to make investment and you're not going to see the reward from that investment or the detraction from that investment until a point in the future, right? So those two things need to marry up. And the US, I think, are trying to get this policy setting much more stable, much more clear, at least. Like, here is the pathway. If you go down this path and you tick all the right boxes, you will get permitted. And I mean, it's partly existential to what they want to do, right? They need these localized supply chains if they are really serious about having local manufacturing, about reinvigorating the refining part of the supply chain, if they are serious about reducing China's leverage over them, which is, you know, hugely concentrated in metals processing, and you've seen it at the tip of the spear in rare earths, but it's so much bigger than that, which I think most people don't understand. So I give the US sort of a B+ in the way that they're trying to, in very quick time, get sharper and better at getting these processes going. In terms of the judicial nature of the system in the US, I've got no issue with the process in some ways, that it's there as a check. The extent to which it's exercised in the US just feels excessive, and and can get things bogged down. And in an asset like this, and then if I even go another angle, I'll give the sector a E in the way that it promotes itself, right? The way that it is generating groundswell or going back to grassroots and educating people on the significance and importance of this industry to their livelihoods, to all the things that they consume, to growth. They're so scared of coming out from behind the veil, right? And for the last 20, 30 years, they've stayed behind there. They haven't wanted to rock the boat, and I think it's done them a disservice. I think a lot of people, the easiest place for people to go and pick on, from an ideological point of view, is mining, because they've been told and taught it's bad. But that is a fundamental misunderstanding, that it is fundamental. If it wasn't grown, if it wasn't like the food and grains and wood, timber that we grow, it was mined. Absent recycling, which there's just no way that recycling can ever support the level of consumption that we have on materials, it was mined. So how can you love a farmer and hate a miner? It's illogical, right? And the overall footprint on the on a area basis versus mining is a fraction. But you never hear BHP or Rio Tinto talking about that. You never hear them trying to promote this sort of education within school systems or communities. And instead, we end up in these very complicated places where ideology drives the outcome. This is a copper mine that we're talking about here that is a kilometre underground, right? Yes, the ground disturbance, there will be some, but it will be tiny in terms of area. And as far as I've understood, and again, I'm no expert on this asset in particular, it's not really where we hunt, is that, the indigenous lands that are recognised, the closest one is 20 miles or something from where this will have a disturbance. So they're not very good at presenting or marketing those facts to the community and generating support. And this is much bigger than just an asset. This is about reshaping how people think about this industry and coming out from behind the veil. Stop being so scared of people criticising and asking and having the conversation. So in that regard, I think these guys have been their own worst enemy over a 20-year period.
The next one I'm going to talk about is the NdPr price. So this nearly hit US $90 this week, which is a huge 50% plus rally, very similar to the lithium price since about late June. So as Tom O'Leary at Aluka called it, this might be the inklings of a non-China or a bifurcated price. The reason we've seen this kick up is actually a confluence of a heap of factors. So you've got this peak production season from a manufacturing sense in China occurring right now. So that gives a bit of a demand boost. Then you've got pretty strong home appliance numbers coming out of China and globally in pockets as well, which boost that demand. Hence, more magnet production is taking place. And then on the supply side, you've got a supply contraction, very similar to the license sort of debate that we spoke about with YJ and last week in the lithium world. The Chinese are taking a stricter sort of view on environmental licenses, and of course they're huge producers of rare earths as well as processors. So this adds to a bit of a self-fulfilling thing with big cargo holders of rare earths in China saying, hey, maybe it won't sell, we'll hold on a little bit longer, prices run up, you're pulling more supply out, and then traders have jumped on board and pushed this up. So you've had a kind of beautiful confluence and a run-up of a price from, really in the doldrums for a pretty long period, around $50, which was not economic for anyone. So all of a sudden there's a lot of love, and a lot of the names, which I'm sure you're very familiar with, Dingo, have, they've run up sort of 5x from the beginning when all this MP Materials announcement started taking place. So it's a hard one to kind of rate. But if I take the perspective of the junior, battlers on the ASX in the rare earth space, I'd love to give them an A because they're finally getting a bit more attention on them. The importance of what they're doing is kind of being highlighted, and hopefully along the way, a few projects get a bit more capital they need, and the sort of cream rises to the top there.
Yeah, for the sector, I'll give this one an A as well. I think, it's great to see that that the theory works across all commodities, this rare earths has been in the cost curve for a while, and the rare earths cost curve is very hard to decipher with any real accuracy, I would say. But it is certainly felt like it's been there. It's been the incentive price hasn't been there, and there's a very big geopolitical overlay on this one. Like, this is right at the tip of that spear, and China love to put the foot on the throat. And I think they still maintain a fair level of leverage there. So, but equally, it's good to see the commodity price responding in such a way to meet these funny supply-demand dynamics, I think, which then enable the sector to raise the capital to advance the assets. that doesn't my opinion doesn't mean that I think all these assets are good assets and that they're all going to get there. I think you have to be selective in this space to protect your downside, right? I think a few of these assets will get built. They need to be at the right end of the cost curve, but we don't need 100 rare earth assets.
Well said. Well said. I think I got one more for grade control, unless you want to chuck in a few more. This one was plucked out of the Endeavour Mining's conference call. It was actually a few weeks ago, but it's sort of come onto our radar just recently.
You can hear it straight from the horse's mouth. I don't know if it was the CFO or the CEO.
One's just on the hedge. You make the point that it's been quite financially painful to you, although I understand the reasons why you put it in. Fair to assume that as we go into 26, your comment that you'll be unhedged means that we won't be expecting to see any hedging go through the accounts into the next year.
Anybody who proposes a hedging program for 2026 will have to deliver the proposal along with their resignation slip.
Excellent.
Pretty
Who wants to go
crystal
first?
I'll give the comment an A just for the make it a joke. It was pretty funny. I like the character in a conference call. They're usually pretty dull. Like just thought that I think the CEO also made a comment in the same call. Used the word bum fight. There's going to be a bum fight. Implore all of that kind of stuff to just add a bit of character in the conference calls on hedging itself. Like of course you want to be unhedged in these good times. I do think it's you can easily see and interpret how we have pro-cyclical capital allocation in the sector. It's like in the times where gold price is really high, everyone wants to be fully unhedged, and then it's like when the times are low, then everyone's putting hedging in place because they've got that short-term bias of history in their head, and also it's what all the investors are talking to them about, right? So I just think more long-term thinking and long-term kind of thinking about this sort of stuff in a counter-cyclical way, like you invest every day, Dingo, like would be welcome in the capital allocation front.
Yeah, no arguments on that front. I mean, and we don't always get it right, but it's certainly a framework of thinking that we work within. I love conviction. I give that an A. He's telling the entire world clearly what he's telling his employer, I think, but structurally gold looks pretty reasonable. The best hedge that they could have is to focus on costs, right? And that probably doesn't get enough focus in the gold world. Best hedge you can have here with a really healthy commodity price, whether it trades at this level or around 3,000 or up, is to get your costs down.
Yeah,
you maximize those margins and have that discipline at the top of the commodity. Is this a top at a healthy commodity price?
You can that's an interesting point too, because you can hedge your diesel. Like those are options to lock in your costs for a long duration. Let's try a sweet deal, sour deal. There's been a few deals this week. Some interesting different kind of deals. Again, the cap raises are prolific. You must just be getting crossed on the regular for a cap raise or the likes at the moment, Dingo.
Been busy for a couple of months.
Yeah. So let's start there. I mean, the ones that kind of come to mind this week. It's just big in the rare earth space, like Lindian and Arafura. There was $180 million together between the two there, just kind of massive on the cap raise front. Did you participate in either of them? Sweet deal or sour deal?
I think overall sweet. It's good to see capital being injected back into the sector to advance the assets and of decent quantums.
Yeah.
Participated in Lindian.
Yeah.
Yeah. Happy to ring the bell on that one if you like. And
you've got a pathway to it's FID. It's getting.
It's a fantastic asset, right? Yeah. To the point I think we made just before. Very happy to be asset selective here.
Yeah.
Very happy to take a sort of stock picker's view of different things, and it's low capital intensity. It's low cost. It's in it's not in the simplest of jurisdictions, but this runway should see it fully funded, and they've got the relationship and agreement with Iluka, so commercial pathway to production. Yeah, there's a lot to like about this one.
Yeah, you didn't say it, but my views on Nolan's are very public, so I'll say that. But, then in the gold space, we are Magnetic came to mind. I don't know if there are any other ones on your radar that came up this week that were were worthy of your participation. But
I think they were the two big ones.
Yep.
Again, I think both of them are sweet deals. Both of them will enable those companies to go and advance their assets further, and they have very credible places to commit the capital.
beautiful. Then on the strangely royalty front, Regal's royalty fund, so they are raising money to acquire this royalty over Malabar's Maxwell Underground. So it was coal royalty, New South Wales, $94 million.
Sounds pretty interesting, right? So 1.25% life of mine royalty, just another demonstration here that money is going to go into New South Wales assets and continue to look away from Queensland coal assets, because we're in a pretty tough environment. And I think sort of the Whitehaven team really emphasised this week. But in a tough environment, and you're still only $5 away from the royalty mark hitting incrementally 40% on your earnings, means capital is going to be starved from that space until there's a shifting of the rules.
This is a massive issue, right? This, I think we sort of semi-touched on it when we were talking about BHP, Rio Tinto resolution. This short-termism of policy, for which our political system seems to support, is so damaging to industry, and it's so damaging to capital. And the thing is that you don't see it straight away. So, and the political cycle isn't long enough for them to bear the consequences of it either. And so you have to have that long-term vision. You have to understand that you're having long-term implications by these policy settings. I think a key takeaway from BHP's earnings this week, and BHP is not necessarily a place where we hunt either, was what they weren't saying. It was, where are they allocating their marginal dollar going forward? It wasn't into Australia, right? And nowhere is this idea that if the commodity price signal is there, the policy setting clearly isn't. And this is so evident in the oil and gas sector, who have been saying this and acting or behaving with their feet, leaving, and capital not coming in for the last 10 years. And it's now just starting to come to materials. And it's completely disrespectful to the fact that over the last 20 years, the majority of our GDP growth here in Australia has come from the materials sector, right? It impacts everybody, whether you work in services on the East Coast or whether you work in a mine in the Pilbara. It impacts you. And this is the bit that the politicians, I don't think they either don't care for, or they don't have an understanding of. And, we've just had this this productivity roundtable this week, and to me, it's frightening what's coming out of that. It's not surprising that BHP, to me, are committing capital offshore, and ironically enough, into Argentina, than they are into South Australia copper.
Mm. And mining barely had a seat at the table at the productivity
Barely
commission,
had a seat in the table. And
mind-blowing.
more commentary, let's increase taxes more, let's increase royalties more, despite the fact in Queensland, quite starkly, they have railroaded the metallurgical coal industry. I mean, they were some of the lowest cost, highest grade, highest quality assets globally, going into, primarily going into steel production for metallurgical coal. And yes, there is some thermal up there. Those assets at this price point now are uneconomic, and nobody's investing in them. And that's going to have a radical impact on Queensland. And, again, if you want more evidence of this, and Sam Berridge talks to this a lot, you guys spoke about this last week, Victorian gas.
Yeah.
What you're seeing now in terms of the cost of living pressures, the price of utilities, the price of the gas, the uneconomic nature of industry there, is a function and a direct impact of policy that was put in place 5 or 6 years ago. And you're only just seeing the consequences of that now. And it's damaging, right? It takes a long time to fix. And, it takes a lot longer than a 3-year political cycle. to fix. And so it is going to require people to be more aware of these things, to understand what it is that the consequences of what's occurring.
I think to tie in what you said earlier as well, Dingo, it's the advertising of what the industry does for the country. It's not present in the minds of the people, the value add to the country that that these companies bring from operations that are on the other side of the country. And that advertising needs to be more present to highlight the positivity of what the industry does.
Yeah, like where in this productivity roundtable has anybody spoken about cost, about economic growth, about an understanding that, if we just stay on energy for a second, fundamentally, economic growth is energy converted. So we have invested all of this capital and seen all of this capital not come, right, because of a policy setting that is just sending the price higher and higher and higher. And for some reason, we think we're going to get productivity out of that. It's the exact opposite at a very, very fundamental level. Economic growth is just energy converted. We have to be competitive on a global scale with the inputs that we're putting into our industry, whether they're service-based or whether they're primary industry.
I think we've done ourselves no favors with this, like marketing or like framing or siloing out of what we classify as critical minerals from the rest. And I just think it's that gets such a hugely unwarranted political focus compared to, like, especially relative to what like Australia's GDP composition is from the mining sector. Every mineral is critical. That's why we mine it. We mine it because we need it. We don't mine it for fun. It's absurd that
Exactly.
that if we just like reframed mining as critical, all of the minerals as critical, and I just think that you get like better focus on what matters, because iron ore cost matters a lot. Coal mining cost matters a lot.
Yeah, totally. And I'm so sympathetic to the person, the general person on the street is feeling the financial repression that has been here for a while, right? They are feeling it. I don't think everybody fully grasps it and understands it, but they can feel. I'm so sympathetic to that. But where we land, I think, politically is we keep band-aiding things, right? Oh, if we change this policy over here, hopefully that will work. Or if we give you some subsidy over there, or we change this singular thing in the tax system, none of that stuff is going to fundamentally work. What about the idea of growing the pie? Right? We're so fixated on the pie is fixed, whether it's the economy or investment or whatever. What about the old adage that I think we did very well in this country, which is let's grow the pie, right? And how do we be economic and how do we be competitive? And as we grow that pie, how does our well-being as a community grow with it? And we've just moved so far away from that in the rhetoric, and because it's hard on the street, it's hard for people to get away from the real short-termism of it. And that's where our politics, that's where really ambitious people who are strong leaders, I think, could be very powerful. Unfortunately, it's not what I think we've got at the moment.
Yeah. I mean, we've done such a great job in this country for so many years. Just hopefully we can kick back some of the own goals and keep going in a positive direction. To round out with one more sweet and sour deal, there was talk about Tianqi potentially proposing to take over IGO stake in Kwinana. And there's a few sort of policy tie-ins in this one as well, because it ties in with that whole downstream narrative, which our government was very big on and still, not quite as loud, but there's things like the tax credits that are supposedly going to kick in a few years' time. Now, IGO wrote down this investment to nothing a short while ago. The last quarter alone, it operated, I think, about 35% of nameplate capacity, and they still lost $29 million in the quarter. So it throws up a whole heap of questions about, would FIRB even approve any deal like this? But there was a very interesting catch, which I only saw right at the end from Frank Ha, who's the CEO of Tianqi, saying, hey, yep, we would be interested in buying your stake in Kwinana. We're very keen to keep going and keep putting in money. And there would be a catch that you would have to sort of sell your stake in Greenbushes if you were wanting to sell your stake in Kwinana to us. So, yeah, I love the balls from Frank Hart there. He knows what he's sort of playing with, and the dynamic in that JV, as with most JVs, is kind of fraught, or at least starts out friendly enough and then ends up being fraught.
I love the commentary that came out of Tianqi. I think it's so loaded.
Yeah.
You know, on one hand, it's so almost funny. It's hard to say it's not. To say you've been ramping up this plant for 5 years, or are still committed to it. It's still nowhere near even half of its capacity. So, you know, looking deeper, like why are they doing that? And I think maybe that last comment that you made there, maybe that's the rub. Maybe it's like, yeah, we wouldn't mind squeezing IGO out of Greenbushes, and how do we do that? You know, and whether that's going to work, probably not, right? That's not what I'm saying, and I'm not expressing an opinion on IGO here. I know why. I agree with them. I would want out of that downstream processing it as well.
Yeah.
Doesn't it just really highlight the limitations of a joint venture agreement where where when you buy into a joint venture and you don't have control, like effectively, like,
and that's a complicated one, right? That's a JV on a JV.
Yeah, big time. It's you managed to buy a stake in the lowest cost lithium mine in the world, but it came with its attachments, and those attachments were a joint venture that is incredibly onerous, and you don't have the ability to curtail, you know, the capital that is going towards like it's literally just a money hole.
Yeah, exactly. Very logically, I think IGO, we are wasting the value of one of the best resources in the world by just plugging it into this downstream processing facility that is loss making. That is very rational. You know, that's entirely rational where they're coming from.
Absolutely. Last but not least, fellas, any hidden gems, any nuggets, any podcasts, any movies, any concerts, or anything sticking out in your mind? Something you want to shine a light on?
I can't stop. Well, I'll let you go first, JD.
All right, I'll kick off. I went down to Found, which is the brewery in a spot that's seen a few breweries go through that in the middle of Subi there, and they've good little spot, good pizza and stuff, but they've got this wicked new beer called Zest West, and I've punched a good few of them lately. So go down to your local and support them, because that was a ripper. How about you, fellas?
I've probably misinterpreted this segment, but
give it to us.
I'm still pumped up about. So JD did this big historical episode on Fortescue, and as a result of that, a couple of the people who were right there at the beginning sort of reached out. We got coffee with them yesterday, and I'm just buzzing. It was 2 hours with people who've lived through this absolutely formidable thing, you know, like creating a true major from nothing. And I was buzzing all day yesterday and last night from that combo. It was just wicked.
Yeah, nice. I might just carry on in that theme, because it just reminded me of a conversation I had last night. But yeah, and to be positive about what this sector can create, you know, and the opportunity that it can have for multiple people. New World Resources taken over recently by Conterra, and just speaking to a few guys there, there's a guy who is now, he is effectively going to buy a house for every single one of his kids, right? And he is just an everyday guy. I believe he was a landscaper or something like that, right? He runs a very honest business. He lives a very honest life. He's made an investment there, and it's paid off in spades. He's now, and there's several guys, Fortescue reminds me, because there's several people on that register that have, at the most incredible stories you've ever heard. And that is so fantastic to hear, guys having a win like that. This is just truly life-changing. And that is, if we all play a role in this sector. If we can keep promoting and growing these assets and delivering value, and what it means to the people that are involved can be just enormous, And equally New World guys that are on drill rigs, guys that pick up rocks for a living, They've all had a win there, and I just think that those stories they're just so good. They're so good to reflect on. There has to be something more to what we do, and I love that aspect. Perhaps more to the theme of of the segment. Something that caught my eye this week on the arts front, which is not necessarily something in my expertise, is Quentin Tarantino is coming back, but not with the 10th movie that I think all the fans are waiting for. He's coming out with a stage play next year. So
Really?
if you're interested in a bit of blood, gore, and quirky dialogue, that appears to be where he's directing his attention. So yeah, that perked up my interest this week.
That's awesome. Have to catch that one.
Before you go, mate,
Okay.
anything in the portfolio that's been changing lately you want to talk about? We had a good chat on the phone the other day, and I know you're thinking of a few things, but are there anything you want to kind of air out, in relation to the things you're interested in right now?
Oh, I love that. Again, really passionate about the next suite of assets, and when markets are hard, hunting around in these things can be a very friendless thing to do. But I think some of them now are just starting to come out and be seen, and I think Black Canyon's right at the top of that list. So this is a manganese discovery in Western Australia. The drill program there that they've undertaken in incredibly quick time. It's been 12 months. And probably $3 million worth of investment, I think is unveiling a true bulk commodity project. It's going sort of 30% manganese. We haven't seen this since Woody Woody. It's 80 kilometres from Woody Woody. And equally as a bit of a kicker, I also think they've got some exciting iron ore discoveries there. So, that's really front of mind. And at a 50 mil market cap, there's nothing ambitious about that at this point in time. So great to see that investment into exploration is still leading to discovery.
Discoveries are back.
Yeah.
It's great.
It's awesome.
Yeah.
And that's what it's all about. And then, on the rare earth fronts, I've probably got to give a shout out to Viridis in Brazil. Yeah, ding, ding, ding. That has been a tough journey, but they've done good work. That is a quality asset on the economic front, so which I think is pretty important. And they've just gone ahead now and got the sponsorship, really, of the Brazilian capital market, and that is, that's truly fundamentally changing. That's sort of life changing for that project and company. I think it will allow it to mature and grow up in many ways. So
The latest change is substantial there. I think came from a Brazilian fund, so you can kind of tell the local, the local capital allocators are this is the Clay's project that they're backing into production.
Yeah, I think it's significant that that's where you're seeing the investment. So that's a great sign to me. I love seeing that level of sponsorship on the ground from sophisticated capital allocators. Yeah. It brings a high level of validation to the project, and to get an asset from discovery through to production, it takes a lot of people, takes plenty of capital, and it takes a lot of things to go right.
Yeah, Barbs.
St Barb's.
Do you own it yet, or are you still waiting to?
Yeah, no, we own St Barbara.
Own St Barb's. Yeah,
I think deep value proposition.
Deep value.
Yeah. So in terms of the potential portfolio of gold growth that is advanced and well understood, latent infrastructure. It's I'm not sure there's any better exposure out there.
It lights up green on the value screen every time I've ever looked at it.
It has for a little while now.
That's why I always love hashing out the buy thesis for it, and it's because it's.
It's got its warts, and everything has its warts for sure.
Yeah.
But there's something to be said for, in a world where I think we've discussed today, permitting's not easy in any jurisdiction. If you have latent infrastructure, if you have sunk capital, if the policy setting turns for you, and look, in PNG, they've just got it looks like they'll get that mining license extension. It's been recommended to the mining minister that he approve such. The platform there is pretty significant. So they got a few things they still need to work through, but ultimately with a long-term, big picture sort of view there, it looks pretty deep value.
Fantastic.
Awesome.
Dingo, it's great to have you join us. And hooroo, mate.
Hooroo. Thanks for having me, boys.
Hooroo.
Cheers.
Big thanks to Dingo. Big thanks to our partners who make it all happen, mate.
Our awesome partners, Focus, the platform, brought forward by Marketech, Sandvik Ground Support, ADU, get your tickets to the conference September 3rd till September 5th, and Axis Mineral Services. Hooroo.
Hooroo.
Now remember, I'm an idiot, JD's an idiot. If you thought any of this was anything other than entertainment, you're an idiot and you need to read out a disclaimer.